I don't need to tell most of the people on this webinar, but economic storm clouds are gathering. There was an article that was written in Time magazine recently by Ray Dalio. He's the very large hedge fund manager. It was called "Why the World is on the Brink of Great Disorder." And now, we don't know how bad things are going to get, but that's why smart investors are concerned about how dramatic negative changes in the economy will impact their portfolio, and also how they can protect themselves from that.
Mm-hmm.
And you're right to be concerned, ultimately, because the reality is that most portfolios, they're still positioned for, let's call it fragility. Okay, we're going to talk about the idea of fragility and how gold is your anti-fragile asset. They're not positioned for the coming economic storm. They're positioned for exponential growth. They contain fragile assets that don't do well during economic storms. Assets that depend on the continued performance of others. And I'll talk a bit about that in a minute. More money printing. But there is an opportunity to act now. By having an appropriate allocation to precious metals in your portfolio. Because precious metals, and in particular gold, is an anti-fragile asset. It has a 5,000-year history of performing during times of economic hardship, of weathering economic and geopolitical storms. However, investing in gold, it comes in many forms. Not all of them are right for your portfolio. So that's a very important part of this presentation, is looking exactly what are the right forms of gold for investing via your IRA. So understanding what I'm going to talk to you about next is going to make you a smarter and better investor when it comes to an allocation to gold in your portfolio. Let me just get on to... So that's what we're talking about. We're talking about unlocking the power of gold in your self-directed IRA. Now, Ray Dalio, Chairman, Co-Chief Investment Officer of Bridgewater Associates. Recently, what he said is, as an investor, I worry about cash and on debt returning much less than inflation. And I'd worry about not being well diversified. So we find is that the vast majority of portfolios are heavily concentrated in the traditional asset classes, stocks, bonds, your traditional 60-40 portfolio, not well diversified. What I want to talk about is, you'll hear me say this a lot, that gold is not a financial investment in your IRA, but ultimately it's essential financial insurance for your IRA. Talk about the idea of economic storm clouds. What are we talking about? Well, we've got inflation. We've had significant inflation over the last number of years. The Fed are trying to tell you now that they've got it under control, but you and I know how far that the dollar or the euro or whatever in our pocket is going. And it's not going as far as it used to. We're a banking crisis that has raised its head. There has been a larger amount of balance sheet failures over the last number of years than there was during the global financial crash. It's a shocking statistic. We've got a global debt problem. In the US, over $34 trillion in national debt. We've had an energy crisis over the last number of years. A food crisis. We have issues with respect to climate change. We have equities at all-time highs. We've got war breaking out in various different hotspots across the globe. We've got this talk of de-dollarization, the BRICS countries, what that may mean for the reserve status of the US dollar. And election years always tend to be exciting for financial markets. So what I'm going to talk about today is going to understand the role of gold in your IRA, decide what to buy, the various different options. We'll go through that. We'll also look at what you can't buy. That's a very important thing to understand. And then the idea of storing, because when you hold gold through your IRA, you're not unfortunately able to take delivery of that. So it's held on your behalf. So it's really important to understand the way in which that gold and or silver is held. And then we're just going to step you through. It's a very simple process, how to add gold to your IRA. So kicking off, who are we? Goldcore. As I said earlier, established in 2003. We've over 14,000, it's over 15,000 clients now. We have transacted over $1 billion worth of precious metal sales. We store, and we get into this in a bit more detail, on a fully allocated and fully segregated basis. All of that means that everything that we hold is separated out by client. Everything that is owned, there's a physical product backing that on a shelf in a secure vault with your account number and name on it. We utilize one of the largest storage networks across the globe. So this is particularly of interest to IRA holders because you don't just have to store and hold metal in the US. If you want to, and that's your preference, you can. But if you want to be able to store it offshore as well, that is also something that is available. We score 4.8 out of 5 stars on Economy rating, something we're very proud of. We're a member of the Better Business Bureau, and as we have an international presence, as I said earlier, we're in Ireland, we're in the UK, and we are in the US as well. So we have appeared, myself and colleagues, we appeared on CNBC, on the BBC in the UK, on CNN, some names you'll recognize here. We are a contributor to the Reuters Precious Metals poll, and we have also appeared on Bloomberg TV, and also in Bloomberg articles regularly. And we are regularly quoted in Market Watch as well. So, understanding the role of gold in your IRA. Why should you actually invest in gold through your IRA? Well, the first reason is inflation, and inflation has really reared its head over the last number of years, and we have seen the potential impact that has on our portfolio. When held as part of a balanced portfolio, gold acts as a hedge against inflation. Now, I don't want you to take my word on any of these things. This is some analysis that was carried out by the World Gold Council. And it looks at how gold performs in times of inflation. I'll zoom in because the writing is quite small on that one. You can see in periods of low inflation how gold performs, but particularly how it has performed in periods of high inflation. So gold over the last since the turn of the century actually, has returned approximately on average 8% per year. So it has kept pace and outpaced official inflation over the last 23-24 years. It's a store of value. Now, when we talk about a store of value, I love to share this slide. It's a slide from it's actually an animation from one of our videos that we released a good long time ago. It's over 10, 11 years ago at this stage. And what it shows you here is it shows you the amount of bread that 1 ounce of gold would have bought you 100 years ago. So we've got, what have we got? It's about I'm not going to count. I think it's we've over 100 anyway on that one. This is what it will purchase you in bread today. And we all know how much the price of bread has increased, particularly in the last number of years. So gold will actually, an ounce of gold will actually buy you more bread today than it would have 100 years ago. And you say, Dave, okay, so what? Well, over the last 97 years, the value of the dollar has fallen effectively by 97%. So what does that mean? Well, it means 100 years ago, you've got 10 loaves of bread for your dollar. And now for your dollar, as you will all know, you get an awful lot less. So what we're talking about is in times of high inflation, when you're looking to protect your portfolio against inflation, one of the best things that you can do is to add gold to it. Gold's outperformed all major fiat currencies over time. You can see gold there at the 100 line, based at 100. How it has performed, I think I can zoom in on that one, how it was performed against many of the currencies over the last century. Now you can see a few of the names down there at the bottom, those that do not exist anymore. Particularly the Reichsmark, and how it has held value. Why? Because effectively gold is money. And gold is, while fiat currency is currency and loses value over time, gold is money. It holds its value. As they say, soon there will be nothing money can buy. For everything else, there'll be gold. It's no one else's liability. What I mean by that is gold doesn't require anyone to perform their duty to protect its value. That's a really important thing. So if we look at that from the point of view of equities, and there's some notable faces there, obviously you'll recognize the likes of Zuckerberg and Elon Musk. We have got Elizabeth Holmes of Theranos fame. Down the bottom left, we have got Adam Newman, WeWork, and Sam Bankman-Fried. Whenever we invest in equities, we're not just necessarily investing in a product. We're investing in that management team. We're investing. We need everybody in that company effectively to perform their duties in order to hold and gain in value. Gold, if we think about it, it's a lump of metal. It sits on a shelf in a vault. It doesn't have to perform anything. It holds value. It appreciates in value as the result of everything else that is going on around it in the world. Bonds. When we invest in bonds, we're looking for politicians to perform their duty, to be able to manage an economy so that they raise taxes, so that they're able to repay what they have borrowed through the bond market. Now, obviously, in the middle there, it's the ex-Prime Minister of the UK, Liz Truss. Current Prime Minister Rishi Sunak. I didn't put him up there because Liz Truss was famous for nearly crashing the UK bond market in the last couple of years. So when we invest in bonds, we're investing in effectively the government's ability to manage an economy so that they can repay what is owed on those bonds at a later date. It's that simple. Property. When we invest in property, who are we looking to perform duties? Well, we're actually looking for our tenants to be able to pay their rent. There's upkeep on that property. If they're unable to pay their rent, or there's large upkeep on that property, our investment is under threat. And then cash. When it comes to cash, you can recognize on the left there's a very young-looking Alan Greenspan. Ben Bernanke, again, looking quite young in the middle, and Jerome Powell on the right. So effectively, cash, it's about managing your currency to protect against high inflation. And we know what has happened over the last number of years. So again, when it comes to cash, when it comes to bonds, when it comes to property, and when it comes to equities, we are looking for others to perform a duty in order for those assets to maintain, to hold, and to appreciate in value. And we know in the vast majority of those cases that they don't. Gold's a tangible asset. Quote there from John Paulson, very famous hedge fund. In these times of uncertainty for paper-based currencies, I feel more secure in holding gold. It's a tangible asset. We can only increase the amount of gold that there is above the ground at the rate we can find it, that we can mine it, and that we can refine it. It's not only tangible, it is incredibly scarce. All the gold in the world would fit into a cube about 20 meters squared. It would fit into 2 Olympic-sized swimming pools. That's all the gold that has ever been mined in the world. It's incredibly scarce. So not only is it tangible, it's scarce, but it has been desired by humans for millennia. It smooths and protects volatility in portfolios. Again, here's a bit of World Gold Council analysis to demonstrate this. And if I zoom in here now, we'll have a look at a number of various different crises that we've seen over the last couple of decades. We see there gold is in the kind of dirty goldish color on the right-hand side. And we see how it performs against, there's a benchmark, the MSCI World Index there, gilts, long gilts, and gold. So if we look at how it performed throughout the crisis around 9/11, again, gold outperforming all other assets. During the global financial crisis, when we had a massive correction in stocks, gold performed incredibly well. We have a number of different sovereign debt crises over the last decade and a half. And again, gold outperforms all other major asset classes during that time. In the UK, when we had Brexit and sterling lost its value, again, gold outperforms. And we don't have to go too far back. We go all the way to the end there. 2020, during the pandemic, when we saw a significant sell-off in equities, gold outperformed. So this is an interesting slide here, which is to understand the motivations of people for investing in gold. And you can see that the vast majority of people, when they're investing in gold, they look at it as a diversifier. It diversifies your portfolio. It diversifies your portfolio for exactly the reasons that we saw in that last slide, which is it performs when other classes do not. That's why it smooths out the volatility in your portfolio. It's an inflation hedge. As I said, on average, 8.5% return on gold for since the turn of the century. So it keeps pace and outpaces inflation. Let's zoom in on that one there. So that's why I say that gold is not a financial investment in your IRA, but is very much an essential financial insurance for your IRA. And if you need any more proof, central banks are continuing to buy gold. This is not a one-way directional play. This is not about saying, okay, gold is going to the moon. You have to put everything that you have into gold. This is very much about that idea of financial insurance for your portfolio. So we recommend 5–10% of your portfolio. There's no Wall Street saying that says put 10% of your money into gold and hope that it doesn't work. Because what that means is the other 90% of your portfolio is performing. But it's for those periods of time, for those periods of crises, that's when gold really comes into its own. And if you look around and see where we are now, there's an old expression which is if you throw a frog into a pot of boiling water, he'll jump straight out. Whereas you put him into a pot of cold water and turn the temperature up, he'll stay there until his skin falls off and he dies. Now I don't know how accurate that is, but it gets across the point is that if you look at where we are and what we've gone through over the last number of years with high level inflation, the absolute incredible growth in money printing that we have seen, astronomical levels of national debt that we're seeing, not just in the States, but across the globe. And very, very quickly, this is the idea. This is just a demonstration again. It's World Gold Council analysis that looks at the amount of gold that is being purchased by central banks around the globe. 57 central banks around the globe. They're all nearly 70% of them are increasing their holdings of gold, including the largest central banks. And you can see the significant difference in the last number of years. So central banks are buying it. Here's a little, very quickly go through this. This is the why they are buying it. And if you can see the second one from the top, I'll ignore the one at the top there, but the second one from the top is saying performance during times of crises. So central banks are buying more and more gold. And one of the biggest reasons that they are buying more and more gold is because of its performance during times of crisis. So what do they know that we don't know? Long-term store value and inflation hedge, effective portfolio diversifier. These are all the things that I've been talking about, and it's the same for our portfolios, your portfolios, as it is for the central banks. I say ignore the one at the top where it says historical position, because ultimately what that means is all of the reasons below that are the reasons that they have held it historically. Very interesting one is the very last part there. Is part of a de-dollarization policy. Now, 4% of those said that was highly relevant. Another 4% said it was somewhat relevant, and 30% said it was marginally relevant. So again, these central banks are putting gold are buying gold and putting them into their portfolios because they have concerns around potential de-dollarization. Now, that draw attention to that and say, it might say it's very small, but oh, it's not on there, but if we were to look back there at that survey last year, that would have been practically zero. So it is becoming on the radar now of a lot of people. So really important part here is deciding what to buy. Okay. And how you're going to navigate the options. I'm going to go through this very quickly. It's just a lens through which to look at it. We talked about the idea of something being an inflation hedge, talked about being a store of value or being nobody's liability, talked about it being tangible, and talked about it being reducing volatility. So just to compare it, what we offer is physical gold and silver. So it's coins and bars, actual physical coins and bars that will be stored on your behalf for your IRA account. So if we look at the other types of gold that you could invest in and look at a gold ETF, is it an inflation hedge? Well, it tracks the price of gold. So yes, it is. Is it a store of value? Well, it tracks the price of gold. So yes, it is. Is it no one else's liability? Not quite. Layers and layers of custodians who effectively are owning you're owning a share of a fund that has a claim on gold. It's not the same thing as actually owning physical gold itself. Is it tangible? Obviously, it is not. Does it reduce volatility in your portfolio? Yes, it can, because it tracks the price of gold. Gold futures, another option. Inflation hedge? Well, it tracks the price of gold. So yes, but it scores really poorly in all of the others. Why? Because ultimately, all it is a derivative. Gold mining stocks. Again, they can be an inflation hedge, because you should expect that if the price of gold is going up, well, those stocks that you are purchasing, the value of those should also go up. Let's move this over here. Should also go up. However, it is not considered to be a long-term store of value, and is definitely not nobody else's liability. Again, because it is a share, it is not tangible, and they tend to be fairly volatile, so they do not reduce volatility in your portfolio. That leaves us with bullion. Bullion is just another word for physical gold and silver. It is an inflation hedge, as we've looked at it. It is a store of value. It is nobody else's liability, and it is tangible, and it does reduce volatility. And we've had a look at all of the analysis that backs all of that up. This is not just our opinion. It's not just our investment thesis. This is backed up by the data. So what would you buy? Coins or bars or both? Okay. And there's a reason you might buy coins. There's a reason you might buy bars. Coins are very beautiful, and you get coins of various different nations, whether that's your own gold eagle or a British Britannia. You can buy many different types of coins. They have a lot of, and you can see from some of the images there in the corner, a lot of intricate designs in them. They're legal tender in their country. They're highly recognizable. They go through a minting process, and as a result of that minting process, there's a lot of effort and work that goes into creating that coin throughout the minting process. They tend to be, the vast majority, once you'd be investing in, will be 1 ounce. Okay. So a lot of people are very much in favor and attracted to the idea of owning coins. The benefit of coins, highly recognizable, highly divisible, right? And here's the interesting, that this is the thing. So we're looking at gold trading at the moment of not too far away from $2,200. Okay. If you had, let's say, if you have $12,000, for example, to invest in, you're probably going to be looking at five 1 ounce gold coins. Now, if you buy 5 1 ounce gold coins, you have a bit of change left over. If you buy 5 1 ounce gold coins, when they appreciate in value, you can sell those off 1 coin at a time. If you want to realize a bit of profit in your IRA, you can sell them off one coin at a time. If you had the equivalent, and it would have to be a 5 ounce bar, so probably not the best example, but if you bought a 5 ounce bar and the value of that 5 ounce bar goes up and you decide I want to take a bit of profit, the only option that is open to you is to sell the entire bar, because you can't just sell a portion of that bar. You'd have to sell the entire bar. So whether that was a 10 ounce bar, a 100 ounce bar of gold, a kilo of gold, 32.1507 ounces, or even for very large investors, a 400 ounce bar. So you get much greater divisibility when you are purchasing coins. But, and as the bullet point says here, the premium. Because of that divisibility and because of the craftsmanship that goes into it, and because of the minting process that goes into it, the premiums on those coins tend to be higher than bars. Now you can, if you, as I said, the vast majority of coins that you'd be investing in are 1 ounce coins. You can also invest in 1 ounce bars. They will give you the same amount of divisibility. They're not as attractive. They're not necessarily as recognizable. But a lot of that doesn't matter given the fact that these are sitting in your IRA on a shelf. So you'll find that premiums on smaller products, 1 ounce coins and 1 ounce bars, tend to be larger. The premiums on bars tend to be smaller. And why is that? Well, it takes effectively the same amount of effort to mint a 10-ounce bar as it does a 1 ounce coin, except that cost is now spread over those all 10 ounces. So you find that bars have lower premiums. And the larger format bar that you have, the lower the premium that there is, generally, comparably. So therefore, if what you're looking to, what we find a lot with people who are investing in gold in their IRA is they tend to prefer bars and larger format bars. And it also depends on how much that you are actually investing in gold through your portfolio. So if you're investing 100,000 or more, you might have the option of doing that in 10-ounce bars or kilo bars. If you've got smaller denominations, you want something that's a little bit more, a little bit more divisible. But again, these options are what Matt can talk you through when you speak to him, exactly what's right for you. So that's the idea of divisibility and premiums. And then when it comes to storing, there's not really a whole difference between storing coins or bars. But it's actually, as I said earlier, when it comes to storage, everything is stored on an allocated and segregated basis. Allocated means is when you buy coins or bars, those specific coins or bars are registered against you. Interesting thing about bars, and you'll see it in the picture there for a few of them. Most bars have serial numbers on them. So if you buy bars off us, more than likely, vast majority of them have serial numbers on them. Those serial numbers are recorded against your name in your IRA account.
Oh, thank you for saying that. You said the word your name. It's not you buying it. It's your IRA that's buying it. Yeah, thank you, David. Just want to make your personal dollars. We always talk about diversification, and I know that the majority of you are listening are talking retirement dollars, but that doesn't mean you don't reach out to Dave and Matt and talk about using maybe a portion of your personal dollars. That's up to you to decide, not up to me to decide. I'm here to educate you, and so is Dave. So,
indeed, I am. Facilitating precious metals in IRA is only one aspect of what we do. So it's done on an allocated and segregated basis. The allocated means they're registered against your IRA account. Segregated means they're separated out literally and physically on that shelf from the next IRA account. Here's a couple of examples of, from the coins point of view, that are approved to be held in an IRA. Some beautiful coins there. American Gold Eagle is one of my favorites, as is the Buffalo. I do love the Buffaloes as well. There's a wide selection. Various different silver coins that are available. So the American Silver Eagle, Australian Silver Kangaroo, Austrian Philharmonic, Silver Britannias, Canadian Maple Leafs. Now, naturally, most of our US clients favor the silver and the gold eagles when it comes to coins. If we're looking at bars, we have some minted bars and some cast bars here. And again, various different formats, whether it's 1 ounce, 10 ounce, 100-gram bars, all the way up to 400-ounce gold bars. Now, 400-ounce gold bar is not too far away from 900,000 in value. Obviously, larger investors are keen on those things. Premiums are really fine on those, but the divisibility is quite poor on those. And again, I've got because the silver's about $24.50 an ounce, $24.50 an ounce. So the value of you've got 1,000-ounce silver bar there. Okay, so we're talking about 24,500 in value there. And you compare that with your 400-ounce bar in gold being close to $900,000. But they're two of the bars that are approved for holding in an IRA. Very quickly look at what you can't hold. Numismatics, all right? Oops, sorry, I've gone on there. Excuse me. Numismatics. There are some, sorry, numismatics are effectively old coins, where most of the value of that coin comes from the premium over the gold content. So it might have 1 ounce of gold in it, so the value of the gold in that is about $2,200, but it could be a coin that sells for $30,000. Okay. Now, when you buy a coin like that, it doesn't have the same properties for your portfolio because it doesn't necessarily work as an inflation hedge. The numismatic market is very different to the bullion market. So numismatics is one thing. Semi-numismatics, which are kind of like they're older coins, but not as old, quasi collectible as well. There are some exceptions to that, but in the vast majority, they're not approved for holding.
Dave,
Collectibles.
thank you. Yeah, but thank you for going over these, Dave, because you'll be surprised how many people try to buy precious metals that are not IRA compliant. And one of the beautiful things for IRA club members, these are the conversations that you would have with Dave, Matt, and the Gold Core team, is to ensure nothing like this ever happens, right? That there is no prohibited transaction. So make sure, and I'm saying I'm not worried about this, but this is a conversation Matt would have with you to make sure you're set up the right way.
Sure. Now there is some sharp practices that go on out there as well, and I really want to anybody that's listening on here, I just want to warn them about that. You will find that there are some companies, and effectively what they'll do is they'll take what are ordinary bullion coins, and there might be the Canadian maple leaf, might even be an eagle, and there'll be good high grades of them because, well, they're bullion coins. All the ones that come from the mint are going to be nice high grades. Maybe they might even be proof versions, which only effectively command a slightly greater value. They'll have them slabbed up, so they'll have them graded by somebody. And before you know it, you're paying massive premiums on these things, most of which you will struggle to get back at a later stage. What we're looking at here when we talk about this, about bullion here, is we're trying to get the most economic form of that asset into your IRA, because ultimately that's the thing that is going to give you that diversification. That's the thing that's going to give you the return from a inflation perspective. You don't want to end up finding that you're spending 20, 30, 40% above the actual value of the coin. That's eating into all of that financial insurance aspect for your portfolio. So when you put stuff into when you're putting gold or silver into your IRA portfolio, you want to make sure that you are doing it in the most efficient way possible, and that's what we advise you on. None of our team work on a commission basis, so which is really important for us, because so they're not incentivized to actually sell high value products.
Dave, if you don't mind, I mean interrupt. A private question came into me. I'm not gonna say the last name. I'm just gonna say Chris. Okay. For short. Asks, so how does Gold Core make money? So and I'm not sure. I was going to ask, is this you guys make money on percentages? And clearly, you just said you're not. So unless I'm saying something different.
Yeah, and I clarify that. Obviously, we charge a margin. We access wholesale markets for these products, and we charge a margin then for retail.
Okay.
Yeah. So, and then the final thing on here is origin. So only reputable and approved refiners and mints. So it's the quality of the bar. They have to be a recognized refiner or recognized mint to make sure that they go into your portfolio.
Sorry, go ahead. My apologies.
Well, that's all right. I can fly through this one as well, because we talked about the idea of storage. Fully allocated, we explained what that was. Fully segregated, explained what that was. So fully allocated, it's all points and bars. If they're bars, serial numbers, they're allocated against your IRA account. If they're coins, again, all allocated against your IRA account. They're independently audited, so we have auditors that come into our vaults, the vaults that we use, and ensure that everything that we say that we hold against each of those IRA accounts is ultimately correct. We utilize a large storage network across the globe, so we have vaults across the US. I think we have many vaults we're utilizing in the US at this moment in time, Matt.
We have 3 in the US and 9 globally outside of the US.
So this is coming toward the end. This is, as I said, it's a simple 3-step process, and Matt can walk you through exactly this if you give him a shout. Open a self-directed IRA through the IRA Club, fund your IRA, and then just purchase approved gold and/or silver from Goldcore and choose your preferred storage. It's a very, very simple three-step process. Could not be easier.
I hope this was educational to everybody that's still on. Dave, Matt, always a pleasure, gentlemen. Take care, guys.
Thank you.
Thank you.
Thanks, everybody.
Take care.
Cheers.
The information contained herein is intended to help the viewer successfully navigate common IRS and Department of Labor requirements to help achieve successful results from their IRA. The information is not intended to replace information from your legal counsel or income tax professional. IRA Club does not offer or sell any investment. All investments have risk.